So yeah, just continuing from just scaling into your trade. So yeah, that's what I typically do. Just, if I took a trade here, if I'm looking to take partials, taking partial here, take half or whatnot. And then you can easily see that, we're in this downtrend right now, right? Temporarily. So this sweeps liquidity, either take a trade just right after the liquidity being swept, or I just wait for the next pullback. And then I'm start taking these trades. Half is being taken there as well. Both of these trades should be at break even already, right? You can see we have this little W formation, right? We come up, tap into here. I don't even know, that's like a balance point. And I just wait for a reaction. So maybe something like this, I say, you know what? I take the risk. I might lose this, it might continue to go up, but I'll take the risk, especially if I'm just trying to build the account or I'm just stacking the trades. I do something like that, right? Mark your goals, take this low, 50% off, break even. All right, we had this high, this low. If I'm looking for this high to go, we create a new high, a complex pullback. We sweep the liquidity out of here. This candle close. I'm taking a trade here, right there. Partials being taken there, 50%. Then you can see, boom, boom, boom. Another trade being taken there. So now what? Partials being taken there, 50%. And then we just keep going until we touch what? Something may be strong enough. And then, I'll start taking partials along the way where it start feeling like I'm getting a little risky, right? So I might start feeling like I'm being a little riskier. So I might close everything. And then I'm happy with that because these are a lot of trades to take,
Yeah.
And we do the math, you might end up making maybe 30, 40% on all these little trades. And then in a matter of, you took your first trade here in a matter of just 4 hours, you then took all these trades. That's a lot, that's a lot going on.
Crazy. Yeah.
So, I mean, on average, let's see, you took the breaker block here. All right. All right. That'd be your first half, right? And I'm just based off this on a half, not even holding the runners. See what this look like. And this is not including the actual leaving it running, right? So you can start seeing how this would end up building up. All right, so now we do the math on that. 4, 3, 4, so that's 16, 19, 20, 24, 25, 28. So about 28, 29 are just on those trades, right? Yeah. And I told you I risk 3%, right?
Easy money.
So that's 87%, just those trades.
What the fuck?
Because I risk 3%. So that's 87% right there. That's without taking without taking partials or not, just closing the trade, the full trade, right there, right, like closing the full trade. That's 87% right there.
Crazy. Yeah.
Now,
awesome.
Imagine I'm leaving runners, right?
Yeah.
Why not?
So imagine leaving runners now to taking this. Let's say we aiming to take this low to the left.
Well, because as a liquidity point, it needs to be taken.
Exactly.
Yeah.
Now you're looking at 1 to 13, 1 to 8, 1 to 12, 1 to 8, 1 to 5.
Day's done.
Right. And it's all runners left. So now you're talking about 50% of all this. So, we're going to call this 7, call this 4, call this 6, call this 4, and call this 2.5. So now you're way over 87% for the day. Like just 1, 2, 3, 4, 5 trades. It can start getting crazy.
Congratulations,
There's
you're
a lot possible,
profitable.
yeah. It's
Right.
crazy, man.
And people think I lied about making 2,000% in 2 days. So yeah, I mean it's very much doable.
Mhm.
You just got to be careful with it. That's all. So yeah, erase all this stuff. So I have to do it individually. All right.
It's crazy because more simple it is, more easier it is. Like it's the same repeatedly schematic.
Yep. Like so now if you imagine doing the same thing on a 15-minute time frame, that means your swings are a lot longer. So if you took a trade, let's say up here, up here, up here, this is the first low, first high I made. So this is liquidity. You took a trade here, right? And then now you take, let's say you potentially could have taken a trade here. If you felt like it, this would be more risky because I don't really see much of a reason to really take a trade here, but I see a reason to take a trade here, right? So you trading on a 15-minute time frame and you're using 1 minute to get into your entries. Now you're talking about, potential entries that look like something like this, right? So now your entries might be, something like this, 1 of 25s and stuff like that. And you're scaling into trades to do what? Tap into the strong low. So if we looking to take out the strong low, I just put it at the top just to balance it all. 29. Then this liquidity being taken. So this is your first entry. As you can see, I already got something up here. No, I don't. I thought I did. So something like this, right? You can see that this actually stacks up a lot, even sexier. This is even sexier, right? It's 1 of 19, 1 of 29. That's on a 15-minute time frame. Let's just say you just took this trade in. So now you see that you could scaled in like that. Now you got a 1 of 5 or a 1 of 6 if you want to call it that. 1 of 29, 1 of 20. Yeah. So yep. Different ways to look at it. Just follow the trend line. Understand that the trend line that you're trading is liquidity being built for the future. And once it hit a OB that's strong enough to reverse this trend line, you should already be out. If you miss your opportunity to be out the trade, at least you took partials along the way, right? And you break even. So you really shouldn't have no problems or worries about actually losing your trades bad on scaling down, because as long as you sticking to the rule of taking partials and not getting greedy, because we like to get greedy as traders.
Yep.
You'll do just fine. You'll do just fine. I ain't gonna say that this is easy to do though. It took me a while to really get used to it. I started getting very greedy with it, and I blew a couple of accounts doing it. But I made money off of the account though before I blew it.
It's definitely worth it.
Yeah.
Like, compared to other jobs, it's crazy.
Yeah. Like I made a few $1,000s off of like just a small amount, and was able to take withdrawals and everything before I blew the account. I finally blew it, but I mean, I actually secured real money in my bank account. So something you want to do maybe with $100 account, $200, like any money that you feel like you're just comfortable with, just kind of just like whatever. Because it's supposed to be if you're gonna risk live funds, it has to be something that you're willing to risk. Or if you have like any type of accountant or somebody give you financial advice or whatnot, that'll be the person to talk to about doing stuff like that. But yeah. If I talk on it, I base it off of I just call it like, look, or based off a demo account. If you're trading the scale in the demo account, you definitely could use this. You know?
Yeah.
So yeah. But it is fun to do. You know, you catch a nice little thrill off of it, seeing those numbers get ran up. Yep. So yeah. So anybody have questions about anything so far? All right. You know, any questions at all? It could be anything.
You answer all to all mine. I'm okay now.
Anybody else? You know, I like to ask questions. I like to hear y'all talk or whatnot. You know,
Hey, bro.
yeah.
Yep. I want to ask why this point is a strong one because it's take liquidity here and it leave imbalance here.
Like, come on, why this the one that's marked out? Why is this a strong low?
Yeah, this is supposed to be strong, right? But it's taken out with the news.
Well, so let's look deeper. So temporarily strong, right? Because for the per time frame, right? So it looks strong. If I look at it like this, it looked like it took out some liquidity, right? And this was a strong low. Right, but watch this. We go to a higher time frame. Oh, let's go to maybe 30 minutes. It's just another low. See? Now on this time frame, don't this? Oh shoot, wrong one. Don't this low look strong? Liquidity taken, low created, a high, a low, liquidity. That's why you gotta cipher through your time frames. So now it's obvious, right? Everybody can see that how obvious look now, right?
Yeah. Inducement, yes.
Very obvious that this is a low that needs to be taken out as liquidity.
Yeah.
So you go through your time frames and look, make sure that point is strong. Because even something like this, you could tell this is strong, right? We take out liquidity before what? Breaking the structure high. Broke the structure high, liquidity, and then we go on by our business. We could trade it until it's ready to take it out. And then we're going to continue going up high. That answer your question?
So would you say this low is also strong?
This low?
One.
I say yeah. It took out liquidity, correct?
Yeah.
And it broke structure, right?
Yeah.
Yeah, it's still strong to me.
So would you sell something here to here for the next week?
Not necessarily, because we could just continue to go up higher. Remember, the market could do something like this, right? Market could just do this. Take out liquidity and just continue going up higher. It could do that. You just gotta, that's why we just play the reaction of the market. So we want to see what happens. Because if we create, let's say right now, this might be the what? This might be the first high that was created, and this could be the low. Well, then we need something, right? We need to take out the liquidity out of here, create liquidity here, and then maybe we can start looking to take out that. Or something like this could happen. If you pay attention to candle formations, we can break past this, tap in here. Now this is a breaker block, and then continue going up bullish. That's why we play the reactions, because these are like the different things that can happen here. So if we get some type of Asia session that, you know, let's say Monday open up, and then you just see, you know what I'm saying? Start seeing like a build up, right? We take out, then we might see something like that. Then later on Monday could happen like this, or Monday could continue to go up higher till Tuesday, ready to take it out.
Because I see this one is a range broken, and then this one like break again, and this one should be inducement. So my thinking is we should sell something from here to react to here.
Yeah. But then at the same time, look at this. You have this low. Right?
Yeah.
Right? We could take liquidity here. I mean, look at this liquidity. Like it's liquidity everywhere here.
I expect this big wick is gonna take out first, and then we're gonna buy.
Yeah.
We go higher, I think.
Yeah. It's potential.
What I expect.
All of it's potential. That's why we just wait.
Yeah.
That's why Asia, like with Asia, we're gonna see the buildup. We're gonna see what's gonna happen during Asia. Asia could do
Yes.
multitude of things. We have Asias like this, where there's a long Asia, right? We could create a strong low for Asia, right?
Mhm.
And then this tells us like that could be Frankfurt and this could be London. And then we just continue bullish. That's why we wait for it. I'm not going to sit here and pretend like I know it all and predict. I'm not going to predict it. I'm going to wait to see what happens.
Yeah.
Always wait to see what happens. When you start sitting here trying to predict, oh, this is going to be the high, or this is going to be that. That's when you start setting up a bias for yourself, and then you get stuck on your bias, and then you lose a trade.
Yeah.
Every
Just
time
play
I
the
Yeah,
reaction.
that's a lot. Yeah.
Yeah, every time I try to predict the market or try to stick to a certain bias, I get screwed.
Yeah.
So that's why anytime anybody asks me about it, I always say I just play the reaction, because we don't know what the market is going to do. Like if it want to, the market tomorrow could just do this, just come straight to here. And you'd be like, what the hell? I mean, how many times we said that in the market? Like, like some people said, what the hell to this? You know, I could have said, oh yeah, the market is going to come down here first and then it's going to go up. And then I'm trying to hurry up and sell before it takes out the liquidity up here. Like we can't guess it, you know?
Yeah.
We can't guess it. We can't guess it. We just play the reaction. So depending on what buildup happened during Asia, we don't know if we're gonna have an inducement type of Asia, or are we gonna have a strong low for Asia, or we don't know if we're gonna have a strong high for Asia, right? Because Asia could do something like this, and then tap into something like this, and then Frankfurt have something like this for you to tap into to go a little lower and then go up higher. That could happen, right? Or, you know, we could be setting people up for the sell to buy model, right? Where Asia do something like this, Frankfurt do this, and everybody's looking to trade maybe here. And then the market comes to here, take out liquidity and continue going high. And then we screw the buyers and the sellers right here. Like there's a multitude of things that can happen. So I'll just wait. Typically, I don't even trade Mondays. I trade Mondays very, here and there. But sometimes I don't trade Mondays because Mondays could be misleading.
Yeah, Monday is really hard for me as well. Most of the time I lose on Monday actually.
Yeah, me too. I normally lose on Monday. So that's why I stopped trading it as much, unless it's very clear. Like this was super clear. So I mean, this could have been an easy trade to take, right? Let's see, another Monday. Like this Monday, I did not like. Like this is not, I mean, it's a nice move, but after taking out liquidity here, I would expect to sell.
Mm-hmm.
I mean, would some of y'all agree? We took out liquidity, so I may consider this as a strong high. We have liquidity. So when this react like this, I'm looking to take that sell.
Yeah.
Then I get taken out. And then now I may think that the market is bullish. So now you've seen what? You've seen a high, you've seen liquidity being built up, and now you see this, and then you still get manipulated. So you have to just pick your own battles. We have to pick our battles. So that's why you may not see me trade on certain days or certain situations, because it's something that I've been screwed up on already. So
bro.
Yeah.
So I see that this one's take us liquidity here, and this could be a strong high, but this one is also something like this, and we just took out this. So does it mean this one is a strong high? The same question, still the same question. That I've been looking for this point like for a while now.
So what is the overall higher time frame wise? We're bullish or bearish?
I don't know. I think we are ranging.
Are we? Where are we
You
going?
need the high to go out before, I mean, setting.
What's the trend
That's
though?
why.
The trend line is what? The trend is high, right? Bullish, right? I don't know if y'all noticed this. Watch this. I'm gonna show you. So probability wise, we're still bullish to me. But look at this. You could say this is a strong high, correct?
Yes.
All right. What happened though? The transfer already happened, right? We already became bullish right here, right? So remember what I talked about. What happens to the left? The left becomes pullback points, right?
Yeah.
All right. That's all that could potentially be. That could just be potentially a pullback point, and then we continue going higher. All right. Look what happened. This is a strong high, correct?
Yes.
All right. Strong high. What happened? Pullback.
Pullback.
Takes out liquidity, breaks it. All right. If I could find a good area that has a whole bunch of pullbacks, let's see. All right. Look at here. All right. You'll say that this was a strong low. As you can see, I have marked. You could take a trade there, but look what happened. It pulls back to take out liquidity, then does what? Go lower. All right. Now it takes out liquidity out. After taking liquidity, we go higher. We have a strong point right here, supposedly, right? Look what happened. We get a pullback, take out liquidity. What it does, continue going. Takes out the liquidity, get a pullback, continue going. Let's keep going. Take out liquidity. What happened? You get a small pullback. Until what? Till we tap a strong point that does what? Reverse the market. Now look to the left. Now the same points that's over here that's supposed to be strong creates a pullback. Continue to go up higher. This is a strong high. What happened? Pullback. Continue going up higher. So probability-wise, is that strong high will only cause a pullback. See?
Yeah.
Like that one. Like, look, this was a strong high. If we zoom into here, look at this. See, it takes out liquidity and broke structure, right? And look what happened. It has liquidity right here. It goes up higher, takes out the liquidity, taps in here. What? We get a reaction. Goes up a little higher, give a reaction, takes it out. Now, after it takes it out, what it does? Take out some more liquidity at these lows, continue to go up higher. And that's how the market moves. It uses the previous points that never was used. It uses as fuel. See, this is a tap of a strong high. It only takes liquidity, and then we continue to go higher because the trend has already changed already. That's why some of this retail stuff that everybody like to talk about and tease, it works. It actually works.
Would you go to the daily, please?
The daily? Yeah, sure.
Yeah.
Let me move this one.
Yeah.
Mm-hmm.
So I see that the daily took out this high.
Mm-hmm.
And it's react. So I
Right.
expect like on the mid time frame, it will like just like go down a little bit more because you have like this one is strong high and then you have a bunch of liquidity
That
here.
strong high already got taken out already, bro. It's already gone.
This one. Yeah,
Yeah.
this one.
No, this one
But
too.
we
Huh?
had
No, this one already been taken out.
no this one.
That one I'm marking, huh? Let me see.
What?
This one, right?
Yeah.
Already been taken out.
Yeah.
Yeah. So each
But
one is going to get taken out.
But you also have a bunch of loss of liquidity here. So, and it's reacted.
It already reacted. See, it already pulled back. So now that could have been a reaction from that. So now we could continue going higher. And then you could get a reaction from here. You get a reaction from
yeah,
here.
that
And it could
so
then
many
tap here, pull back, continue to go higher. Pull back, continue to go higher. It could continue to go higher. It just has to have something strong enough to break this trend line. It's the same thing. Everything fractal. What we do on the lower time frame is exactly the same thing on some higher time frame. This one could potentially pull the market lower. It can. I ain't saying it's not. Like I said, I react to the market, so I'm not gonna predict, but it could tap this area and pull back, take out the liquidity out of here, continue to go up higher. This could be the area that actually reverses the market completely, and then we start getting new lows. Could potentially.
For I think more easier stuff. I personally see strong point as inducement or a zone where the price can have a reaction. So
that's simple.
With that, with that, I can just anticipate it and potentially take a trade when my confluence is met.
Exactly.
I just that's only it.
100%. That's it. An inducement point, like a point after taking out liquidity, or OB can only do one or two things, right? If we had something that has liquidity, like say this is liquidity that need to be taken out, a order block that's a strong, let's just say a strong high could be used to take out the liquidity from here and then continue to go up higher. Or it can be strong enough to tap into this area and then create a new strong high that the market will continue to become bearish.
Yeah, that makes sense.
For sure, man. For sure, man. Take care, Troll. So yeah. So the strong points and a strong point could become a weak point after another strong point has occurred. So if we have two ranges, right? This could be our strong range, and this could be our weak range. So if all the liquidity haven't been taken out, but this is where the strength is coming from, you can definitely guess that, you know, this trade, this would be called something like this. It will tap that weak point, which is temporarily strong, takes out liquidity, tap into a new order block, and then continue to go up higher. And that's what you see on the opposite end. Like I said, that's why some of this retail stuff actually work, right? Trend lines do work. They work till they don't work, right? So like you can see, I've drawn plenty of trend lines, and you can see how good they work, right?
Yeah.
Right. You can see how good these trend lines play. Like, look at this trend line. You could have traded this trend line till it taps something strong enough, and then it takes it out. But you should always have a more like important trend line. Right? You see this whole thing is a counter trend line. It's a trend line. Look how strong it holds till it don't. Takes it out. Right now, this major trend line for our time frame trend line is holding up. You don't just trade the trend line, you trade the inducements and the liquidity and follow along with this trend line. That's the difference between us and a retail trader. Retail traders just, when they touch a trend line, they trade it. We don't wait for just a touch of the trend line and just trade it. We take liquidity. We take liquidity in account. We take the inducement into account. We looking at the counter trend and taking out previous liquidity points. Again, it's just all based off of liquidity. We're just using retail logic against them. I know y'all notice some of these retail traders are the best traders in the world. So why not use their tools and then use the tools of understanding liquidity? Because they don't understand liquidity like we're understanding liquidity.
Yeah.
Some of them are just really good traders. And they could trade this trend line, and they might have, you know, a stop loss pretty big. They might, you know, trend line, engulfing candle, and then their stop loss is something like this. And then what? They're just trading, you know, this last low, the high, and they're trading something like this. You know, TP1, TP2, and then of course up here TP3. And that's a 1 to 9. But for us, you know, you can see my actual POI is here. So the same trades that they taken, now look what my trades look like.
Yeah.
This is a 1 to 37.
Money, baby.
1 to 52. you know, 1 to 73. The reason why I use the same tools as retail traders, these are potential TP areas. So why would I not use the same tools they use that they're using to win trades, even though they're only making 1 to 3s, 1 to 4s? They are more, their strike rate is a lot higher than ours, and they're winning these type of trades. These, you know what I'm saying? Like the only difference is they just got this big ass stop loss. Yeah, you know what I mean? Like they got a big 52 pip stop loss, 30 pip stop loss. I'm just using their tools.
Yeah, if it works, it works. So yeah, why not?
Yep. What works, don't break. It's not broke. Shoot, just keep using it.
Yeah, for sure.
But we got 3 minutes. Any other questions? Do we got any other questions?
I have a question. For what time is the Frankfurt session?
Frankfurt session for me is 1 o'clock, and that's Central Time. So 2 o'clock a.m. Eastern.
And till what time it's over?
When when London starts. So Frankfurt is 1 hour. It starts 1 hour before London, and then it ends right at London.
Okay. Yeah.
Yep.
So will the time, like daily saving time, change?
You said, will it
The-
change?
Yeah, the day saving time.
Oh, daylight savings time.
Yeah.
For either an hour back or hour forward. You'll just change your time. The stuff still fits the same inside of the charts.
So in the summer, we should move like
So-
1 hour earlier.
I believe so. So instead of 1 o'clock, I think it'd be 2 o'clock for me or something like that. Or 12 o'clock. So I can't remember. It's something along the lines of that. But yeah, you just move when you just still look at the charts either the hour later or hour before for daylight saving time.
So
Yeah.
we base the time on the New York time or the Frankfurt time, like when the daily saving time change.
I mean, I really don't. I don't really know. Like I'm not really understanding your question. Like if it's daylight savings time, right? If Frankfurt is 1 o'clock for me right now, then if time moves back, it's 12. I don't know if time moves back or moves forward. But either way it go, I just move an hour. That's it.
Yeah.
Yeah. If that answered the questions correctly.
Yeah.
Yeah. So
Right. I'm gonna eat. See you.
yeah. All right, man. Take care. Any
Thanks.
other last minute questions? We got a minute left.
I have none.
I'm good.
Everybody's good.
Yeah.
So we're about to have a crazy week next week, y'all.
Oh,
Right?
yeah.
I'm
Right?
ready.
Everybody ready to kill it?
Yeah, I'm
sure.
waiting for
Yeah,
that.
I hope I hope so, because I don't want to just see Noah and UZ charts no more. I want to see all y'all guys charts. Cause y'all kind of quiet in this group now.
Man,
So-
it looks like a private chat between us.
Yeah, for sure.
Yes, I know, right? So I definitely want to see y'all start posting y'all charts, because if y'all posting y'all winners or posting y'all losses, everybody else can learn from them. All right. So y'all
Yep.
start posting y'all winners or y'all losers or whatnot. That's what it's there for. We're gonna
Uh-huh.
correct them, and then we're gonna keep on pushing. The goal is to get everybody to understand what's going on. Closed mouths don't get fed.
Right.
All right.
Yeah.
All right, y'all. So y'all have a great rest of y'all weekend. Y'all get yourselves together, be prepared for next week, and we're gonna kill it. All right.
Yes.
Yes, man.
All right, y'all.
Yeah.
Thanks, bro.
Thanks.
For
Thanks,
sure, for
JP.
sure.
Thanks
yeah.
for the call, man.
Oh yeah, man. Y'all take care.
Yeah,
Take
you
care.
too, man.
All right. Talk to y'all during the week.
Yo.
Right.
Yeah.
All right.
Bye.